Slippages and recoveries, gross slippages for the 9 months stood at 9,506 crores, and net slippages, if you look at, it is about 8,941 crores, while gross recoveries reached 10,800 crores, aligning with our annual guidance and demonstrating our commitment to maintain recoveries consistently higher than the slippages. I'll just give you a brief on the various significant developments that we have had during the quarter of December 2024. The bank opened 5 Nari Shakti branches in Bangalore, Chennai, Jaipur, Mumbai and Vijayawada on November 9, 2024. The Honorable Finance Minister opened these branches. These branches will not only support women entrepreneurs but provide tailored resources to foster growth and job creation. On our 106th Foundation Day, which we celebrated on 14th of November, we brought out many innovative initiatives like the Union Account, Current Account STP, Union Green Home Finance, Union CBDC Accessibility Initiative, that was one of the hallmark product for us, for the visually challenged, and many other products that we have launched on that day. We have, as on date, added about 146 branches in the current financial year, taking the total branch network to 8,574. To honor the birth anniversary of our founder, Shri Sitaram Podarji, we also opened a branch at Bissau in his birthplace. We have expanded our clientele by opening 32 lakh CASA accounts in the first 9 months of FY 2025, including our 2.5 lakh premier accounts. We have launched Ignite 2025, a HR initiative, and we drew a lot of HR talent from across the industry, whether it is private sector or public sector. To conclude, the bank remains steadfast in navigating challenges while delivering sustainable growth and value for stakeholders. With a focus on innovation, operational excellence, and customer-centric initiatives, we are confident in our ability to drive long-term success. Thank you, and I look forward to your questions.
Conditions being volatile. One of the challenges that the banking sector faces right now is the stress in the MFI book. Want to understand from you firstly, how is that book faring for you guys? Do you expect, the normalcy? When do you expect the normalcy to set in? After you answer this, I'll ask the other question.
Okay, if I look at our bank, we have an exposure of just about 1,500 in the MFI books, and SMA is just close to about 5 crores. And that's about 0.35%, and there is no NPA in this book. We are not looking at any stress. And my MFI book, if you look at it, is in the MFR1. That's the range that it is in. So I am not seeing any volatility or any kind of stress in my MFI books as on date.
Okay.
55. 45 was my corporate book and 55 was my retail book. We would stand by that, and as the market is growing, we are not seeing much of the capex happening in the larger books, and if at all we are having something coming up, it is in the PSUs only. So I'm not looking at increasing that numbers. And as of now, we are not seeing any slowdown in the urban demand, though I mentioned that, but we are seeing some good growth in the rural segment. And so we will focus on retail segment during the current quarter also, as well as look at the corporate sector to give some muzzle to our growth in advances.
Okay. Also the fact that your agri slippages have sort of increased Q2, would you say that the impact was largely from a seasonal point of view, or do you think that's something wider?
It has nothing to do with the seasonality of the industry. We did the slippages was due to the restructured accounts. We had some repeated restructured accounts which was coming in, and we thought it prudent to slip those accounts, and then once it is slipped, we can give them a proper OTS to those agriculture customers, and then give them a new loan as per the RBI guidelines. So it was a conscious decision taken by the bank to clean up our restructured books and then go ahead and give them fresh loans too.
Okay, and one last question on your corporate book pipeline. Where does it stand, where it stands at the sanctions as well as the disbursements, if you could have the number at present?
Yeah. We have got about 60,000 crores actually. If you look at, the pending for the sanctions are close to about 75,000 crores, and pending for disbursement is around 36,000 crores. That is what we have got. And pending for disbursement is around 36,000. Pending for sanctions is around 39,000 crores. So we have got a good pipeline. Only thing is the market, the appetite of our corporate customers has to considerably increase for them to take this loan. But anyway, we are getting good loans, especially in various sectors like road, energy, telecom, and renewables. There are various areas, EVs. These are some of the areas that we are getting a good number of proposals. We're just waiting that their appetite will grow and they will consume more from the banks.
But what about the pricing side? Does it continue to be competitive?
It is competitive, of course. There are various price lines like MCLR. We are only looking into the MCLR book. I am not looking into the other TBLR book or whatever it is. We are only sticking to MCLR book, and if I get a fair price on the MCLR, we are going ahead and doing it. Now, whatever I told you on 75,000, it's all my MCLR book.
Okay, thank you.
Thank you very much. Yes.
Hi, ma'am. Shakra from Informs Media. Just a couple of questions. Your total business growth was very sluggish, but the CASA ratio has improved. So, are you being picky about lending and deposits to protect NIMs?
No, as I told you in the very beginning that we are steadfast in having a sustainable growth and also the profit line. These are the two things I have to match. If I want to aggressively grow in business, and as I told you, though I have a very good pipeline on the corporate book, if the books are not, if the accounts are not giving at the right price, I'm not getting it, I'm not going ahead and giving those loans. So I am moderating between the two, and that is the numbers that's come out with. My profitability numbers are very good in that regard.
Ma'am, your LCR has also fallen by around 14 percentage points from a quarter ago. So, what impact are you seeing from the proposed RBI norms on your?
See, like any other bank, there will be about 10 to 11% impact on the LCR, but on an average our LCR is about 130.61. That's an LCR that we are keeping, and regulatory requirements tell you to keep about 100%, but we are keeping about 130. If the new LCR guidelines come in, but there is a lot of debate going on in the industry with regard to the new LCR guidelines. As in, when it comes, there will be, of course, impact of about 10 to 11%. Thank you very much.
Yesterday, RBI came with a range of steps for liquidity improvement, not say basically how exactly you look at it and what will be changed for your and
No, actually, the RBI eased the little bit of liquidity pressures, and the stance in the October MPC also was like neutral, and the December MPC also, if you look at, they reduced the CRR by about 50 bips. See, these are all auguring well for the banking industry actually, where we all understand that there is liquidity pressure, and the easing of these norms by the RBI has really worked well. In fact, in the morning when I was talking to the CGM of RBI, I told them that this is one thing, it's like a God-given gift to all of us, and the markets have also reacted very well with regard to the RBI stance that they have taken. And we hope that they continue. My CA will be able to answer what this will do for the economy as a whole. Yeah, Kanika.
So thank you, ma'am, for the opportunity. See, 3 points. First, signaling. If you see same period last year when you would be having this media conference, we as bankers would be complaining that while credit growth is strong, but deposit growth is low. And we were vying for liquidity from a structural point of view. Then a few quarters later, what we found is with Trump coming in, there were a lot of FX outflows from the system. And that also blew out some 5 lakh crores in a span of 3 months from liquidity. So we bankers were regularly going to RBI talking about liquidity